Good morning. Why do I have one? Oh, I got a like. Huge week of earnings. We're going to monetize this mofo. I'm live. YouTube will turn on the do not disturb because I was just getting a bunch of texts. We'll go over to YouTube Studio. Morning, Joe. I see my dog lumbering in here. Live. On. Save. Okay. We'll close that down. And then we're going to claim this back. I might have to log back in. Well, if you're not using multiple workspaces in TrendSpider, you're out of your mind. I love having different setups. That is one of the benefits of having different setups. I was reading a story about this. Joe, this may interest you since you do like out of the some things. DEA. Hey, Mike. Good morning. DEA. It's a stock that has a 9% dividend, I think, 8.33. They basically are a REIT for the government. So it's interesting. Hey. There is no way you need to be anything done here. Come here. Okay. Here. Penny, come on. You can go under there. See? Now you're under the blanket. The dogs are in rare form this morning, so you may very well hear them. But this one was interesting. I'm not interested in looking at it, but daily stock pick screener. Scan. Let's do some scans. Shopify. Whoop whoop. Oh, I gotta put this around here. I was playing drums all weekend, so I used my headphones to play drums. Shop. Walmart. I remember telling people about Walmart when it was on 150 that it's gonna fill this gap. Well, guess what? It's filling the gap. I already hold a bunch of Walmart and Shopify, so covered call ETFs. KNG, what is this? S&P 500 dividend aristocrats. That's an interesting one. Hold on, let me look at that. Is that a levered? Target income. Okay, so it's dividend aristocrats. Let me see. KNG. Let me look. I mean, it's 5%, so I guess it belongs in that. Yeah. ATF, they ain't cutting back on office space, but this one's KNG. We'll put it in there. See if anybody calls me out on that one. Energy names. Oil spiked yesterday, I heard. I wasn't watching it, but I heard it spiked. And then it came right back down. DRN, SARK. low cost Vanguard, nothing. Let's see if a spider sector. I don't think so. Oh, XLRE. Oh, come on. RE, XLU, XLP. P is consumer staples. I mean, Golden Cross. And I know we've had this one in the algo before. That's an interesting one. Am I not owned? SOFI, by the way, is up, way up this morning. Morning, Nevin. I have a 2 p.m. meeting with the Vice President of Trading over at Fidelity today. Hub. For people who want that one. OGN. Beto. I need to create that list. Morning, Cecilia. I need to create the list of all the Bitcoin ETFs. American Eagle, man, I sold that for $11. It's at $20 now. GBTC. GBTC I'll put in there. QuantumScape. Moderna is kind of just it's hovering around there. I hope people got, by the way, and if you're listening and you're not subscribed to the newsletter, I hope people got some benefit from this one. This paid newsletter from the weekend. It was good. I mean, I got really good feedback on it. So I hope folks found it beneficial. Because I did tell somebody, Lightspeed was the company. I think that's the one that. I don't even know. Larry. Team. Man, this one. Atlassian. This one's just continuing to rise. I mean, that's. We got the Golden Cross. You got the run up. Came back down. You're going for his second leg. Hoofa. Okay. That one was interesting. I'm just taking a look at the chart for some reason. Let's go to the Dow. I mean, we've got a good amount of scans that are crossing up, which may point to a pretty good day. XEL. Dollar Tree. Kraft Heinz. Team we have in there, I think. No, I'm going to put it in there. AstraZeneca. My dad owns this one. I wanted to get him out, but I said the chart's looking like it's going to move. Moderna. AEP. Did I put Moderna in there? I don't think so, no. That's an interesting chart. Okay, let's look at the S&P 100. There we go. Scan. I probably should do like the Russell as well. GM. Duke. Southern Company. There we go. Okay, that's all the scans. So let's go back to the strategy tester, and we will go to the 4 hour. There's your entry. Is GM finally taking off? Okay, let me open up some of the... There is one article because somebody wrote to me. Just if you're tuning in, good morning, Chris. Good morning, everybody. Good morning. If you are tuning in and you did not, and you submitted me a social request, I got so many social requests over the weekend that I moved some to tomorrow. So just so you're aware. SMCI. Oh, here's Mike. Here's your, I'm going to bring this up. This was a great article that Mike had put in. It'll be in the newsletter. Geared ETPs. These are the exchange traded products and levered kind of stuff. Closer look, things to consider, objectives, what happens if I held a geared ETP longer than one trading day. Yeah, I mean, I'll tell you, let's see. I still own TQQQ. Let's see. Let's go to Fidelity. Christian, it's our Super Bowl. This entire week is the Super Bowl for us. Let's see. I did not beat the indices on Friday. I got killed. I was down 0.42, and the NASDAQ was actually a 0.10. But it was Apple that took me down. Apple was down 0.9. That's essentially what took me down. Let's see. QQQM, I am up 5% on both my buys. Fairly large buys, not huge, but those are two that I started. And TQQQ, I'm up 10%. And Mike, it goes to, just so you know, and you've read this article, Mike, it goes to exactly. So I bought TQQQ to leverage against my QQQM purchases. I bought them on the same exact day. I'm up 5% in QQQM. I'm only up 10% on TQQQ. So it doesn't track 3 times if you hold it longer. And that's the point. I probably should write this down. Yeah. I bought, let me see. When did I buy it? On 111. QQQ and TQQ on 111. I'm up 5% on QQQ, 10% on TQQQ. And we'll get rid of that underline. There we go. Oh, stop. We're going to get rid of the underline. There we go. So I opened that one. Great. This is a great if you're into chips. I need to change this. Hold on. I need to change Twitter to dark mode. Settings. There's got to be a dark mode. Monetization. Your account. Premium. Creator subscriptions. Security. I guess. Display. There we go. Lights out. There we go. We're going to move to that. And you know what? That's kind of a cool one. Okay. And I guess I don't have to save it. So now when I open up this, lights out. Boom. Great thread. Just a great thread. This one was interesting from TrendSpider. And ignore the comments because they're all from scammers. That's a great one of Intel. Intel. Biden set to spend billions. This is a great earnings week ahead. Earnings whisper. I don't need that one. I'm going to close that one out. Webull, the three companies. We're going to bring up this. This was an interesting one. Morning, Eddie. We talked about divergence in the... I think the TrendSpider team reads my newsletter. But they posted this yesterday. It's interesting because the 30-minute SPY on last week, and like I said, QQQ on Friday was an interesting one because it gapped up there about 1 o'clock. Oh, and I want to... we're going to do this. We're going to look at QAL. This is a ETF that does quality. And what's interesting about it is we're going to look at this one a little bit. And which is the even weighted... hold on. I need to look at my low cost. I guess I didn't put it in here. Did I put it in here? No. Let me look it up. I think it's RSP, weighted S&P ETF. I think it's RSP if I'm correct. RSP, yeah. Okay. So we'll go RSP. Let me do it real quick before I... RSP. Update chart. So this is the... I mean, this is interesting because the quality one includes, I mean, we'll look at the weighting of it and stuff. But we'll look at that, and we'll start out with iShares. Okay, I'm going to start out with QQQ. I got a lot of stuff to go over. I don't know. Well, maybe I'll include this. I'll include those notes. That's not a horrible one. That's not giving away the paid newsletter. We're up 0.09 on Qs. I will be right back, and then I'm going to start the podcast. Okay, everybody's good. I know. Good girls. Okay. We're going to hit the record button. Again, for anybody that sent me a request on social media to look at a stock, my apologies. Let me put in that I did take my medication. For those of you with Apple, I mean, God, that health app is so good. Okay, I got the pre-market stuff to look at. United Airlines, talking with Airbus. I should send. Let me see what's Boeing. Boeing is up 0.53, and one of their largest customers, United Airlines, is talking to Airbus about getting planes. That's crazy. But it's not like here's the thing. It's not like Airbus is all of a sudden going to turn around and deliver 100 planes next week to United. So again, I kind of say it that, and I say this, I haven't said it in a while, but I'm saying it now again. What your grandmother cooks for Christmas, whether it's meatloaf or turkey, it's already priced in the market. They know. They know more than your grandmother does. She may say she doesn't know what she's going to cook for Christmas dinner, but the market knows. That's it. Okay. I probably, you know what? Let me do this real quick. I'm going to add this one. I need an ETF list. I'm going to add it to my watch. I'll do not owned list. Because I don't want to include it in Okay. We'll do this. Boom. Okay, I'm going to hit record. Good morning and happy day after the Baltimore Ravens get bounced out of the playoffs. I was rooting for the Ravens. I think Lamar is tremendous. If you haven't watched a comedian named Staavy, Staavy, just Google him. He is fantastic. He does a character named Ronnie who works at AutoZone. And he basically, he's become huge in the Baltimore Ravens stuff. But I am not happy about seeing the Kansas City Chiefs in another Super Bowl. And I wanted the Detroit Lions to win. So I went 0 for 2 this weekend. Not a good weekend for me if I were sports betting, but I don't sports bet. I actually trade stocks. I changed, my sports betting has gone the wayside. And now I do Webull. And I love the Webull app. I mean, I get sports betting. I get the rush of betting in my Webull app. I put $1,000 in there last year. I'm up to 4,250. So, pretty good. Yeah. But I do trade in that one pretty often. I don't, do large trades. Again, I think I'm fully invested at this point. I think I have like $3 of cash in there. My other accounts, I have plenty more cash. Well, where are we in the markets? Well, see, you've got a button hook here going on. You can see kind of half circle. If you want more information on button hook and what these things mean, I put this in the paid newsletter this weekend. We hit the lower end of the Bollinger Band. What did that mean? Oh, we hit the top end of the Bollinger Band. If you're interested in the newsletter is right here, dailystockpick.substack.com. It is free during the week. So you get all of the charts, everything that I post. It is free during the week. On the weekends, I do a paid section. And it's education series right now. You got 4 parts in the education series. I think anybody tuning into me that doesn't know what a button hook is, doesn't know what a Bollinger Band, may want to know about the MACD, may want to know why I chose the 4-hour time frame, which time frames I like for day trading, swing trading, investing, blah, blah, blah. The paid newsletter is where you get all that information. It's nice, easy, consistent. You don't have to listen to hours. Even though I tell everybody on this podcast everything you need to know, the paid newsletter has a little bit more in detail, and you can go back and read it. That's the big thing. Without spending hours. So where are we? I think we probably start to make a little move down. We're slightly extended. We're touching the confirmation here on the 9-day. We still have confirmation on this 4-hour. Your RSI is at 65. Your MACD is starting to cross down. Algorithm still has you in. And this is our Super Bowl week. So we've got 3 big earnings reports that I'll kind of go over, and we'll go over some of the charts here in a second. One thing that I was looking at is China. I know I've been telling folks don't invest in China. Evergrande, which is the largest real estate portion, they just got approved to declare bankruptcy. That's huge. Think about our housing crisis in 2007, 2008. And all of the destruction that was done to the markets during that time where, Jim Cramer said, yeah, Bear Stearns, they're fine. No problem. Yeah, that was on a Thursday. By Sunday, they were completely liquidated, completely worthless. All of those companies went down. Here's a good article from Seeking Alpha. Everything that you know, everything that you need to know, MCHI, FXI, KWEB, all of these symbols are affected. You can read that article right there. One other thing that I saw Mike Santoli going over this morning that I thought was interesting. He mentioned this ETF QAL, which is the iShares Quality Factor ETF. I want you to notice this chart. I'll put the chart in the newsletter. QAL has outperformed RSP. Now, RSP is an equal-weighted ETF of the S&P 500. This QualShares USA Quality Factor focuses on quality stocks, the quality of what's going in there. We'll look at the holdings, but I want you to notice QAL is up 26% over 1 year, whereas the equal weight is up 6.49%. We can select a symbol, and you know what? We'll just go with the Qs since I'm kind of investing in the Qs a lot here. You can see the Qs are up 45%. So QAL doesn't even do that, but it's an actively managed. My understanding is it's actively managed. If we go over here and we look at the holdings, you can see NVIDIA, Visa, Microsoft, Apple, MasterCard, Meta, all quality names. ConocoPhillips, which is in the energy sector. The QAL, if we go down, we look at its profile. An exchange-traded fund by BlackRock. The fund is managed by BlackRock Fund Advisors. Invests in public equities of the United States. The fund invests in stocks and companies operating across diversified sectors. The fund seeks to track the performance of USA sector neutral quality index by using representative sampling technique. iShares, I have no idea what that means. No idea what this does. But the quality holdings of it, they're solid. I mean, the holdings are fantastic. Here's the dividend growth history. Look at that growth on dividends. The quality against the S&P 500. You can see it's beaten the S&P 500 over 9 months. Over 1 year, it's up over the S&P 500. Didn't beat the Qs. Risk. Number of holdings, 129. Assets in the top 10, 38% turnover. 58% of these stocks turnover in this thing. That's why I say it's probably actively managed in that you're in and out of that 52-week range. You're at your absolute high, 152.46. So that's just another ETF to show you. This weekend's paid newsletter focused on divergence. You can see here divergence, why 4-hour time frame from the algo, what other time frames do I use? I thought it was interesting, but this TrendSpider chart shows you divergence between SPY and QQQ in the last part of Friday's trading. Kind of interesting. I did not beat any of the indices on Friday, but I thought this chart, I'll include it in the newsletter. I like that chart. I like that chart a lot. Earnings this week. I got an economic calendar that I will put in the newsletter from Webull. Again, if you don't have the Webull app, they do so good about just alerting you stuff, and it's all free. It's all free. It comes as an alert to me because I have the Webull app. I don't know if you have to have an account, but throw some money in there. It's fun to trade. Economic calendar from Webull said Microsoft, Apple, and Google. We have major economic events. The JOLT's opening on 1:30 for December. We do have a Fed meeting, rate decision on Wednesday, 1:31. The Fed press conference on 1:31. ISM manufacturing on Thursday. Non-farm payrolls and unemployment rate for January. It's just a weekly one, and that's all on Friday, I think. The Friday unemployment rate is for all of January. It's the first Friday of the new month, so it's 2/2. But earnings this week, Microsoft, Apple, Meta, Google, Amazon, Chevron, more. This article gets you prepared for everything. SOFI beat. This is an article from yesterday. SOFI beat, and they are up. Let's see. Let's go and look at SOFI. I think it's about 10%, 11% in the pre-market. SOFI is up 16%. Remember, I said the $10 stock? Well, it's at $8.84. That is all the way up at this range. You're coming to cover this gap up to $9.57 probably. They said they will be profitable in the first quarter. So just understand that. Tomorrow we have Alphabet. We have Microsoft tomorrow. Wednesday we have Boeing. Should be a nightmare of a report. Thursday we have Meta and Amazon and Apple. And then on Friday you've got Chevron and Exxon before the bell. So that's it. Nice earnings article from Seeking Alpha if you wanted to look at that one. Biden, we talked about Intel on Friday and how listen, the hubris, my Jim Cramer impression. Look at the two candles. You're down at 43. The algorithm got you out with a 10% loss. I got in at about 48.85. Am I out yet? No. And why am I not out? Because I put $25,000 into this. It is in a retirement account. I could have gotten out when it got to 50. The learning that I had when I journaled this weekend was when it got to 50 and I thought maybe that's extended and it was up here at 51, I shouldn't have held on for another couple $100. I should have gotten out with the profit and said, before earnings, I don't know what the earnings are going to say. I did read the tea leaves, but the reaction to the market was what I didn't know. And so Intel, there's a couple of things that came out over the weekend. Specifically, Biden set to announce billions in chip subsidies for Intel, Taiwan, Semi, and others. Hold on one second. Hey, get down. Sorry about that. But yes, Biden set to announce that. Is that providing a bump to Intel right now? No. I mean, you would have thought it would have bumped it, but 0.18. Again, it's priced in the market. That's it. What's interesting is there's another article, and this is an analyst. The risk of being everything to anyone. And this is from January 28th, which I think was yesterday. It was posted in Seeking Alpha. And this is a kind of, a harsh view of Intel and exactly why Intel. I said it on Friday, and Friday's newsletter is it time for SOXL, the inverse? You can look at this. I do not believe Intel a very compelling risk-reward profile currently. The recent post-earnings sell-off is likely to continue grinding Intel down in the short term. The article about Biden is what's holding this up. It's not, you're not popping because there's no real pop. The only thing that article did was stop it from going down to 41 to the 200-day. Now, as it goes down and it gets under the 200-day, my thesis is you could buy this one. Why am I holding? I just think some type of announcement maybe brings this one up, the $25,000. It could be a long-term play. I just don't want to throw out the baby with the bathwater, but the catalysts are gone. So that's kind of my thing is I'm not exactly sure about what could go on here. I'm holding it, but this week's main one is going to be AMD. AMD's got their earnings coming up. I think it's, let's see, it is January 30th, tomorrow. Tomorrow after the bell, AMD reports. It's got kind of a button hook, nothing too large to say, oh my God, I've got to get out of my positions. This is absolutely priced to perfection. Absolutely priced to perfection. So I would be a little bit careful of this one. Yeah. I mean, this is one that I've got a gain on that's as big, probably bigger than Intel. I don't know exactly how much I own of AMD, but I do own quite a lot because anytime it got under 100, I was just adding to this one. But Intel, this is a great, if you invested in Intel with me, it's a great analyst article to take a look at because it points out ARM, it points out Apple, it points out Taiwan Semi, points out AMD, it points out everything that you need to know about Intel and the risks that are there. This is an interesting one because when you compare it, I just hit comparison in Seeking Alpha when I was looking at Intel. And what I noticed was this, Qualcomm over 1 year, Qualcomm's in the core portfolio is up 12%. Intel is up 45%. Micron is up 40%. But AMD, which is not in the core portfolio, is up 135%. So it's clear, as far as chips goes, I haven't necessarily been looking at the core portfolio. It does have NVIDIA, but I picked Qualcomm instead of AMD because I thought AMD was just number 2. AMD's just killing it. And I do own AMD. And I tell everybody that. I own AMD. If you want to look at the industry ranked of these, Intel is at 15. Qualcomm is at 13. Texas Instruments is 32. Micron is 8. AMD is 12. So you can see the valuation of AMD is F. Again, Seeking Alpha allows you to look at all of the peers in a nice formatted way. So that's an interesting one. Let's take a look at this one, Amazon. We're going to take a look at Amazon because Amazon has earnings coming up. Which article is this? Let me see. Which article is this? New comparison. That is the Intel one. Okay, I'm on track. But Amazon, the only mega cap tech name reporting this week that hasn't made all-time highs. I've been saying Amazon is a good buy because it hasn't made all-time highs. It's the only one reporting this week that hasn't made all-time highs. And I've pointed it out many times. Now you got a button hook here. Clear button hook. Algorithm hasn't gotten you out. MACD seems to be crossing down. The RSI is on a downward trend. It's in no man's land at 56. If we go and we look at a long term of Amazon, you'll see Amazon's all-time highs were here in, this is Apple. Why am I looking at Apple? Here's Amazon. The button hook's on Apple. I was going to say, I didn't think Amazon had a button hook. We're still strong on Amazon. Amazon here, you buy in at 152. I think anything under 160 at this point before earnings is a solid buy. You can see the MACD is crossed up. It's a little bit low, lower than it was on this move that took place back in November. The RSI, this was oversold. Down here, it got quickly oversold down to 28. Right now, you're at 67. So you're slightly almost oversold. Their earnings are on Wednesday, February 1st, or Thursday. I'm not sure which one that is. But if we look at a weekly and we look at this one, the all-time highs are here, 186. Take a look at this was an interesting one because the divergence, I took a look at this. Divergence this week, this is a sample of what's in the paid newsletter from this weekend. Divergence. Look at that Amazon divergence between the price action on the weekly and the RSI. You were making all-time highs here. You were moving in an all-time high direction. Meanwhile, the RSI was saying, hey, there's a sell-off. There's sellers. Even though the price was going higher, people were selling because the relative strength index was going down. The MACD was going down. This was clear that this was going to happen. And that's what I wanted to point out to people in the history was, hey, there was divergence. If you didn't notice it and you didn't see it, maybe you stuck it out like I did. I stuck it out. We had a couple of pops here, which were super, super positive. They were buying opportunities to get in, even though it was lower lows and lower highs. It was still a buying opportunity. We're up there. We're above the 200-day, the 50 days moving positive. Again, Amazon is the only big cap tech that has not moved. It has not gone back to its all-time highs. So I think this one goes back to all-time highs. You can do what you want. I think Andy Jassy is doing a great job up there. But yeah, Amazon is the only one. Shea Boular, who I am a fan of on Twitter, and you should absolutely be following. Semiconductors are the foundation of the digital economy, which is a path to becoming a $1 trillion market cap by 2030. The semiconductor ecosystem is complicated, but here's my simplification of my favorite companies within the space. This is an unbelievable. If you don't understand chips, if you're just throwing money in, just understand that you've got to get into this thread. This thread is just a kind of, it's a dummy overview. And that's what I am. I'm a dummy. I didn't know half this stuff. And I loved this thread. I really, really like. You can see I retweeted it. I thought it was an absolute masterclass in chips, how to invest in them, which ones you want to own versus others. Like you can own AMD, Qualcomm, NVIDIA, Marvel, and Broadcom. But why don't you own IBM? Why don't you own Apple? Why don't you own Google? Why don't you own Tesla? Why don't you own Meta? Why don't you own Amazon? And the design, ARM, Synopsys. I mean, own some of these other stocks in the chip sector because the chip sector is like Shay says, it's driving the digital economy. I thought this particular one was just a masterclass in how to invest in different areas. Now, Mike sent me this over the weekend. And he said, hey, this is a good one for your paid newsletter. I don't think it's, I told Mike, this is a great one for the free newsletter. Part of what I want to bring you guys is not just the education in the paid newsletter, but it's the understanding this stuff. This is on the triple levered ETFs. What are geared ETPs? And these are exchange traded products. That's what it is. Exchange traded products versus including exchange traded funds. So commodity pools and exchange traded notes are a popular way to invest. This is TQQQ. This is SQQQ. This is all of the levered ETFs that I include in when you sign up for TrendSpider. That's included in it. One thing I wanted to bring up is that on 111, I bought QQQM and QQQ. I made it very clear what I was doing. I bought QQQ on 111. I just looked in pre-market before I in my thing. So it's Friday's close. It's not the pre-market. But in Friday's close, my QQQQ that I bought on 111 is up 5%. Okay? My TQQQ, you would think a triple levered ETF that was up, that was bought on the same day as QQQ would be up 15% if I'm up 5%. No, it is up 10%. Because remember, and this article is just a masterclass in understanding these products that are levered. They are levered on a daily basis, not a long-term basis. So you're not making 3 times your money in TQQQ by holding it for a long period of time. Now, I completely say you should be leveraging and using these products to trade with, but I don't say you should own these. I typically try and own these for less than a week. 111, I've been holding it for 18 days. It hasn't made sense for me to sell it. I mean, honestly, I probably should have sold it up here at 57. We're at 55 right now. You're up 0.29% in pre-market. Probably should take my 10% and be happy with it. Algorithm hasn't told me to get out. So I'm sitting here in this one. MACD's crossing over. The RSI is at 63. maybe it's time to get out and do that. But you're in the Super Bowl of earnings week. So you could get big moves up, big moves down this week. That's what these levered ETFs are for, is to try and make sure that you're levered in and you can make some money. Now, it also means you can lose money. So if you're in these, if you're even trading these, I urge you, I will put this in the newsletter. Thank you, Mike, for putting it, giving it to me. But here's the things to consider. And remember, don't listen to a douche on the internet. I'm just a douche on the internet. There's a great article. Have I mentioned SMCI before? Catching the AI wave, why Supermicro is still a smart investment. It looks at how SMCI is actually undervalued. It looks at it against NVIDIA. It looks at it for a price to sales multiple. It looks at a bunch of things like IBM and Dell and Hewlett Packard. Why those companies? You should look at those companies because they may be undervalued as well. So the conclusion for investors who want to get into the AI sector, I wholeheartedly recommend Supermicro as a starting point. I don't know that I necessarily agree with his overall thesis. This one has earnings. Remember, they pre-announced earnings. So their earnings are coming up this week. I think it's, it is today post-market. Yep, today post-market. We will hear them talk more about the earnings. It is up 1% at 479 right now in pre-market. It was up like 3%. It's an interesting one. I don't know that you play this before earnings. We're seeing a little bit of a button hook here. You've got a gap here between 312 and 341. Big time gap. I would say any kind of talk on the conference call about limited supply, about shrinking margins, anything of that causes this MACD to turn over. That RSI is at 76. Here's my strategy. And this is 100% my strategy. I own this in my brokerage account now. It has become such a large position in my brokerage account that I can't sell it because it will cause a tax event. So I've got to start trimming it in my account. Now, I didn't expect this one to move, but I agree it is an undervalued AI play. I think this one probably gets to 500 on this phone call if we get some type of great news about chip supply, about future guidance, about everything of that sort. I think this one gets moved to the 500 level. But that doesn't mean it's not. The RSI is at 76. The MACD is up here at 41 over the oscillator. You can see the gap was huge on that oscillator. I would not buy into this right now, but my plan is to start trimming in my brokerage portfolio and add it to my retirement portfolio. Because if this was in my retirement portfolio right now, I would probably have taken profits on half of this. Remember, I bought this at about 200. That's when I started to get into this one. So it's an interesting one. I think it was even one that a listener had brought up to me. That was huge because this one, it's just enormous. I mean, if you look at a weekly on this one, it's a straight trend up, line down. Straight. I mean, look at this. If you had just bought this, say at the beginning of last year in January, it was an $83 stock. You're up 484%. Okay? What's 10,000 times 484%?
That would be 48,400.
Yeah. Just to give you an idea of how much money I probably made in that one. Yeah. That's a big move, and it's undervalued. So I'd urge you to try and figure out a strategy around that one. It's a good one. SOFI, they missed on their earnings per share, but they beat on their revenue. Plus, they said they will be GAAP positive cash flow. It is up 15.22%. For anybody that got into this one, kudos. Absolute kudos. Chris, he bought SoFi last week. He's up. I mean, kudos. I said it's a $10 stock. Was I putting my money where my mouth is? No. This isn't my kind of investment. I mean, I like trading it, but I'll trade it on a shorter time frame, not a 4-hour. Algorithm got you in at $7.78. Right now in pre-market, you're trading $8.79. So you got $1. That's a big move on a $7 stock. You got $1 and it's up 15%. I would expect it to get more because you know why? Look at that MACD. It's just starting. You're going to get some buyers in here to probably push you up. Let's see. Let's pull the volume shelves back to the last time that it traded and it popped up on earnings. Look at this one. This is the last time it traded and it popped up on earnings. Where are you at as far as the volume goes? You've got this shelf right here at 855. Where are you trading right now? 880. If this one's able to build this volume shelf right here out to this area, I think you start to see a move back up. I think you start to see this $10 come back into range. I think that you've got this $9 to $9.55 gap. I think you've got that within range right now. So, SOFI, solid mover. Let's look at some of the biggest movers of the day. Conocoline Phillips. This is, biggest stock gainers. SOFI demonstrated year over year growth of approximately 35% driven by expansion. Biggest stock losers. This is the Conocoline Phillips, which is a biotech, it looks like. The firm reported 7% year over year loss as well as 3% decline. Looking ahead, Phillips expects a 3 to 5% increase in comparable sales. The free cash flow from Phillips activity ranged between, it's a European one, Ryanair. Shares fell 3%, revises full year stuff. I mean, airlines, you trade airlines. You don't own them. You just don't own them. So there's the biggest movement. Let's go over some social requests. Sam from the Facebook group. I probably should bring this up. Let's look at Facebook and we'll go into it's a private Facebook group. And the reason it's private is just because you get too much spam to actually manage in a public Facebook group. I get tons of spam even in this one. That's a private Facebook group. So, yeah, he's bullish on the Chiefs. I was pulling for another one. I mentioned Amazon. There's the degenerates. Here's Sam's comment. What are your thoughts on how to play Amazon during earnings? It's been good to me, but I'm holding two different positions in the stock, one in a brokerage and the other in a Roth IRA, and split between the actual stock and AMZU, which, by the way, AMZU, solid play. I mean, we've had a great run on AMZU since November. This is a 1.5 times shared bull leveraged stock. Remember, this is 1.5 times by day. So this is not something that you hold on to for a long period of time. It's not worth it because it's just a daily trading 1.5 share. So it's not something to hold on to. But again, if you bought this when the algorithm told you down here, you had a nice 13% gain. If you're still holding on to this, you got 27% over 90 days. 27%. Solid. From the algorithm has you in AMZU at 27.13. You're at 28.91. Amazon, I kind of went over. It's the big cap tech that hasn't really hit all-time highs again. How are you trading this? I mean, in my mind, I haven't sold a lot of Amazon. I haven't trimmed it. I haven't sold it. I bought more when it was down here below 100. I bought more on this dip when it got down to 130. I've simply added to it. Do I expect them to have great earnings? I kind of do. I mean, let me see if I can pull this volume back to, let's pull it back to its all-time highs. If I can grab it. There we go. These are the all-time highs here. So where are people holding? They're holding up here between 164 and 170. That's where I think you're going. I mean, people will start, there will be some selling pressure when you get up there. But Amazon's just one of those, Sam, that I just don't sell. And you can look at my response here to Sam. Solid trade on AMZU. I will go over it on Monday. Of the grade 8, this is the one that I think does this best over the next year. I touched on it today, but the upside now that Jassy has a couple of years under his belt is solid. He's quietly cut costs, increased revenues, and has an eye on increasing margins, product offerings. I think the ad business by itself adds $10 to the stock, but I'll do more charting and views on it on Monday. They added an ad tier. They're running ads. It's an election year. You don't think that these guys are going to clean up on ads? So I'm holding it. Doesn't mean you don't come back down to the 200-day at 130, 140. But Sam, that's how you build generational wealth and long-term wealth. You find a company that's kicking ass in AI, that's kicking ass in the consumer division. That's Amazon Web Services. Meta is running an open source AI model, large language model. Guess what? You got to get either Google Cloud, you got to get Amazon Web Services, you got to run that in the cloud. So I think that service alone is going for AI. Then you add in that they're putting AI into all their stuff. This is a company you don't trade. You own it. You add to it. And that's my solid guidance on that one. Mullen Automotive. This was an interesting one that was posted. It's an article. This is Canoe. That's from another one, GOVE. Yeah. So in our Reddit group, if I go to Reddit, let me see if I can go to Reddit and show this, because let's log in. I'll log in. No, I don't want. Do I want relative T? I don't think this is one that I want. I don't know. Let's see what happens. This one may not be the. Let's see. Let's search daily stock. Oh, you know what? I can go to the link tree. Why am I doing this? I can go to the link tree. I'm not even following my own thing. Go to the link tree and we will find Reddit, which is sign up for Venmo, daily stock pick Reddit community. I'm getting traffic over here that I just don't know about. Not financial advice, past performance, thoughts on target when rate cuts start. The clowns. Mullen Automotive. Which one? Yeah, Mullen Automotive. This is the one I want to read. Following wedge on Mullen, high risk reward. I believe Wall Street got the ticker wrong. Commercial EV is a $1 trillion market with 12% CAGR on 2030 in infancy stage. Only competition is BrightDrop. Valued at $15 billion. Stock has been diluted to hell to a current outstanding. Mullen is one that Joe has traded. And it's one that I've said, hey, I don't think you own this one. I think you trade it. And I don't even know who beginning job, I think is the username. That's not a stock that you hold. And it's kind of like Intel, in a sense. Wall Street doesn't get stocks wrong. If Wall Street gets stocks wrong, you wouldn't have this fall. If all of a sudden Mullen comes out and they're making money and there's things that they can do to turn a profit, then yeah, the stock has a rebound. But they're losing $964 million. They have a ton of money on hand. Not a ton. Let's see. What's 26 times 5.8 million?
Is 150,800,000.
Yeah. They have $150 million on hand. And they're losing $964 million. You're going to get diluted again. And so that's why I say Mullen is a decent one to trade, because when you look at this, it's got volatility. You get some volume spikes on a shorter time frame. Now, the 4-hour algorithm certainly doesn't work, because you lose 100% over 2 years if you bought and held. You lose 100% if you bought and held. You lose 99% on the 4-hour. Now, the 65-minute algorithm that I provide, which just uses an 8-day EMA, this one over 8 months, you lose 99%. You lose 50% if you use the algorithm to get in or out. The problem is all of this stock is just a downward trending stock. You can't make money on a downward trending stock long term. So even though you think the Wall Street got it wrong, I think Wall Street got it wrong with Intel. I think Intel's a $50 stock easily. But Wall Street says no, they don't care. It's not that the thesis is wrong. It may be a huge business, but the stock price doesn't lie. The chart doesn't lie. That's why I mix fundamentals with technicals. Because even if the fundamentals, don't get me wrong, there is no way I think the fundamentals in Mullen are wrong. This is a company that is absolutely going bankrupt, 100% going bankrupt. And they're just diluting people because people seem to think that we're in this for the long term. The only thing that will happen to Mullen is some type of short squeeze. But with them diluting you and having so many shares out in the market, you're never going to get a short squeeze. So I would say stay away from it. But I will put this caveat. Trade it. Just trade it. Chris from the newsletter asked me about GCT. This is GigaCloud. He mentions $20 to $26. It's bowling with bumpers. This has been a solid. Look at this. I mean, somebody asked me about this, and it might have been Chris. You could have traded this. It seems to be double topping around 26. But GigaCloud Technologies, this is one that I think it's still losing money, if I'm not mistaken. No, they're making money. The PE is 14. This is a software company. GigaCloud Technologies, we can look at it over here in Seeking Alpha. I think it's a sell. I think the valuation, let's see, GCT. Even though it's only got a 14 PE, GigaCloud Technologies, I think this one's a little, strong buy. I mean, I may get into this one. Ranked number 1 out of 6. In their category, which is, let's see, quant rating, distributors, GigaCloud Technology. Let's see what they do. Let's scroll down on FinViz. No insiders are selling. Specializes in global end-to-end business-to-business electronic e-commerce for large parcel merchandise. The firm's B2B e-commerce platform, which refers to as GigaCloud Marketplace, integrates everything from, so it's like an Amazon. Payments, messaging products, leveraging, but it's big parcel. So it's not, consumer facing, it's big parcel. Market cap of $1 billion. Not huge. Nothing amazing. 52-week range between $4.79, $26. Yeah. I mean, again, $26, you're bumping up. The target price from analysts is $24. Take that with a grain of salt. Nobody covers this. Year to date, you're up 40%. Performance for the year, you're up 343% over 1 year. Earnings per share this year are up 241%. Price to sales 1.78. It's not crazy. Price to book 4.08. Price to cash 4.83. They have plenty of cash on hand. There's no problem with this one. I agree with you, Chris. It's bowling with bumpers. If I saw this one down at 19 and it was 24, look at this. The MACD just crossed up. You're probably going for a second run. Are you going to make it past that $26? I don't know. You're at $25.38. That's where you're trading right now. So it's an interesting one. Brandon from Twitter. Select quote. Let's look at select quote. Now, if you're old like me, select quote is SLQT. This is one, operates as a technology-enabled direct-to-consumer distribution platform that provides consumers with transparent and convenient venue to shop for complex senior health, life, auto, and home insurance policies. The company operates through the following segments: senior healthcare. Listen, I'm senior. I'm 53. SelectQuote is part of the ads that get shown to me for long-term healthcare, long-term life insurance. It is what it is. I'm not interested in this. The long term of this one looks horrible. I mean, look at that chart. The only thing worse than this is Mullen. You lose 34% on the 4-hour algorithm loses, which buying and holding 2 years ago, you lose 82%. We can look at SLQT and FinViz. Select quote, they're losing $47 million. Name an insurance company that's actually losing money. This is one. Their average target price, $3. You're trading at $1. Take that with a grain of salt because nobody covers this one in 2023 at all. Your 52-week range is between 77 cents and $2.94. You're down 13% year to date. Brandon, no. I'm not in this, with Travelers Insurance, and with Berkshire going up so much, why would I do that? No, not my thing. Let's see. Willing from Spotify wants me to look at SQQQ. And let me read his note. SQQQ for a bounce to 13 or TQQ for more downside as it appears to be button hooking on the daily chart. We went over TQQQ. Absolutely, I think it's button hooking. This one's button hooking on the bottom. This one got you in with a 13.42, got you out. So this one doesn't have you in yet. And these are old notes. I'm just going to remove all annotations. So here you have the MACD that's crossing up a little bit, hasn't crossed up, probably gets you in the next day or so, and it is below the oscillator, so it's, good time to buy. The RSI is at 35. Here's my caveat, Willing, and I said this when I was looking at TQQQ. You're in the Super Bowl of earnings, and that's what's going to push the Qs. So if you believe that earnings will be bad, that, these things are priced to perfection, that Intel, everything that was in the market, Intel said. There was nothing that was surprising of Intel other than some of their guidance. Now, it wasn't guidance that was like crazy down. It was just, okay guidance, but it's priced to perfection with the run that it's been on. SQQQ has been on a run to the downside, just like TQQQ has been on a run on the upside. You're down over last 94 days, which takes you back to, November, the end of October. 94 days, you're down 46%. So is it something that I'm rushing to get into? No. It doesn't have confirmation. Sitting down points at almost 1% today. There's no rush. Everybody calls for a pullback. I had a friend text me an article that said World War III is coming, that everybody should get out of the markets. She has texted this to me probably for the last 6 months. Well, where are we for the last 6 months? Did you get out of the market because World War III is coming? If you did, you missed out on some pretty hefty gains. So that's my thing, is don't listen to a lot of the naysayers that say, hey, this market is going down. Hey, it's priced way too above. If you're losing sleep at night, get out. If you're not losing sleep at night, my argument is stay in. Make sure that you're leveraged. Make sure that your portfolio is managed correctly. But there's no reason to rush into SQQQ right now. I don't look at these things as timing them. I look at them as, this one at 1336, I wouldn't have gotten in until 1376 because you didn't have confirmation. Now that 1376, if you had traded it and waited for the confirmation, over 7 days, maybe you got 2%. It's a solid move. I get really uncomfortable in SQQQ. Just so you know, I get super uncomfortable. Another person on Reddit asked me, GOEV is my current moonshot. Fingers crossed, but do not degen on this one. This is not a YOLO situation. USPS only bought 6 vans for now. It's a catalyst, but a slight one. Here's the article. I'll include this. This is Electric Takes. This is an EV newsletter. And let's go and look at, GOEV. I think it's Canoe. GOVV. Yeah. Canoe. I really like their designs. I really like their actual production models. Nobody's ordering these. It is 100% a moonshot. This is exactly like Mullen. This is look at Mullen and look at this one. Is EV coming in? Here's what you have to worry about with EVs in particular, is that if the Republicans get any type of gain, if they gain the presidency, we know, they're not fans of EVs. They're not fans of moving stuff to EVs. I am not suggesting that you get into this. There's no confirmation on the long term. I would say trade it. And disembodiment from Reddit, and Reddit has some pretty interesting names, by the way. I would not get into this one. Bullish bites from Seeking Alpha. Airbnb for the next podcast. It has a cross up last week. I missed the trade. I love the founder, considered a VC superstar. Bezos owns a ton of it. Conservative PE for such a progressive company. So here's my take on Airbnb. And this is, I kind of agree that this one in particular, I'm not a super fan of. buying and holding, I would rather buy it around 110, 120, where that, if we bring this to the highs here, we'll just bring it to the recent highs, which was November 2021. This is where the volume shelf is. This is where most people are holding it. And if you're holding it down here, fine. If you're holding it up here, you're asking people to pay higher prices for this. I'm not a big believer in this because I have several hosts who have said, hey, it's just harder to make money on Airbnb, and they're on VRBO. It's easily copied. The PE is 18. Yes, the forward PE is 34. So with their growth expectations, it's actually a fairly expensive stock. Average target price, 136. And this is covered fairly heavily. In fact, the most recent one, BMO, they said it's priced at 134. You're at 149. Now, if we go over to Seeking Alpha, let's just go over here and we'll go to Seeking Alpha to try and look at Airbnb. I think their valuation is an F, if I remember correctly. But we'll take a look. Airbnb. Oh, stop. I don't want that. Yeah, it's a hold. Valuation is an F. It's ranked 8 out of 37 in their consumer discretionary. I would Trip.com. I mean, there's so many more travel stocks that you could buy. That Airbnb's down here at 8. The valuation is F. You look at Trip.com, their valuation is B. Their growth is A+, profitability C+. Trip.com it's a great stock. My only problem, and I agree with you, the founder is fantastic. I think he's got some great ideas. If they implement those ideas into Airbnb, I think it's a good one. I'd rather have you wait for some type of catalyst to push it up to 170 rather than have you buy at this high rate. Now, the algorithm makes you 49% versus buying and holding makes you 4%. The algorithm has you in at 138. If you're in at 138, great. I mean, what would have been even better is when you bought at 118 down back here in November. I think you trade this one. I don't think you own it. I don't think this is the moonshot that everybody thinks that it is. Scans. So if you didn't hear and you requested one, I have it in probably tomorrow. Tomorrow I'm going to go over, let's see, I've got my notes, TDG and CVX, IBM. What do you think of Duos Technologies, DEC, Palantir, and Bullet Bytes asked me for Infosys as well. So I put those just because this episode is going to be way too long if I start going into it. Now, scans for today. Let me get back down there. Shopify. Shopify has been one. I've been pounding the table on this one. I still haven't gotten out. Algorithm has you back. It's another cross. You can see the MACD is just crossing right down here. Doesn't mean get out. RSI is a little bit oversold. Their earnings are coming up next week, February 12th. This one, it's a pre-market earnings, so it's a good one. Core portfolio, again, Walmart is one that has a cross up. I've been telling you down at 158 that it was going to fill this gap all the way down here at 159, 158. I said buy it. 152, I said it's a solid buy. This one doesn't dip below the 200-day very often. This one's covering the gap up to 168. You just got another MACD cross up. So the RSI quickly moving down. You've got solid gains in this one. Their earnings are coming out February 16th, so next week. One of the ETFs, KNG, which is a S&P Dividend Aristocrats. Kind of an interesting one. Just got above the 200-day. So it's an interesting one. Pays a nice dividend, I think, of like 7-8%. DRN, which is the real estate bull. You can remember we got a cross up on the DRV. I can go and look at that one. But this one's under the 200-day. Under the oscillator on the MACD. It's just over the 200-day. You don't have confirmation in pre-market. The market right now, you're down 0.54. But if you go to DRV and you look, we got this cross up, I think early last week, somewhere around there. Let's see. Come on, run, TrendSpider. 35.63, but we had another cross up here. So your choice. If you want the bear one, if you want the bull one, wherever you think that is going. That's the great thing about it. XLRE. This might be the, DRN and XLRE, both bullish. The real estate sector has pulled back a little bit. Solid one. Toast, TOST. I had this one requested a little bit ago. BITO, by the way, Bitcoin ETFs. I'm going to create that. I'll include that. Create a ETF list in TrendSpider for you to follow. But Toast, TOST, 1784. This is probably a $20 stock, to be honest with you. The only problem with Toast is the valuation. So, but TOST is a solid one. GBTC, we talked about Bitcoin. GBTC, this one has seen its outflows. The cost on this is crazy. I would rather you own Bitcoin, but you can't own Bitcoin in retirement accounts. I think you can in some places, but Fidelity may allow you to. But oh, look, Gronkowski is promoting FanDuel. He's got his FanDuel shirt on CNBC. But, God, he's a big man. And he's shrunk down since his playing days, too. But $37.50 on GBTC. Dollar Tree has an interesting one. DLTR. This is one that probably rebounds a little bit. Dollar Tree's been doing well. I mean, again, if you got in at that $100 price point, you're up 30%. This one gapped up a little bit today. For some reason, it's up 2%. Their earnings are coming up February 27th. They just had their earnings on November 28th. So, hey, it's dipped down a little bit, coming back. 50 days still moving positive. You're just at you had your golden cross here. You made a nice move there. If you got in at the golden cross, let's just say, and again, in the educational series, I go over golden cross. Let's just say you got in at the golden cross. That's a nice 12% move just on the golden cross. And if you got out during the death cross here, let's just say you got out during the death cross. That saved you 60%. Let's see. I'm sorry, 27%. 27%. So just death cross and stuff like, again, remember the newsletter. It's got divergence, golden cross, death cross, Bollinger Bands, how to handle all that stuff. So if some of this stuff doesn't make sense, just look at that. I've got all of the scans in the newsletter, and the newsletter is free. So sign up for the newsletter. If you like what I do, here is the TrendSpider offer. You can sign up. After you sign up, use the code DSP25 for 25% off. After you sign up, you just email me. And that $14.88 price, again, if you snoozed on the $700 price last week, yeah, you missed it out. But you can still get 25%. And remember, every day you wait, you probably lose money based on this one. But, yeah, there will be another sale on this one. Seeking Alpha, fantastic plan. You save $25. It's a $50 off coupon. If you want Seeking Alpha Premium, that's the level right here. They're offering me the upgrade to Pro. I can get it for $2,400 a year. It's Pro content and newsletter, short ideas, portal, VIP service. You get basically that's hand holding from Seeking Alpha. I would not suggest that one, just my thing. But if you're a pro trader, absolutely get up there. If you're making huge trades, I think that's a benefit for you. But you get the $50 off Seeking Alpha Premium if you click on that one. Alpha Picks. This is the picks. This is 24% versus 74%. Their performance, look, Alpha Picks 85% versus the S&P 20. If you want to know all about it, you can click that link and you can do the about section. Their portfolio laid out. You can do it when they picked it. You can do it by return. You can see SMCI 400%, MHO 250%. These guys basically, when they pick one, they send it to you. They send you a complete, like PepsiCo, why it went in. You get this article and you get the reasons they picked it. And that's why I'm saying this is worth $100 a year, is because this is an absolute fantastic way to learn about why people get into stocks, why they buy it, how they buy it, when they buy it. You mix this with TrendSpider and you can start to see when they actually buy them. So, and you can look at the charts. We can look at Pepsi when it went in. Let's see. Pepsi is part of the core portfolio. I absolutely think this is a stock that you should own, especially down here at 166, 167. If we go over here and we look at when they bought it, let's see. refresh your portfolio with, let's see, when did they buy it? Back to analysis. Picked up. They bought Pepsi on 116. Let's see, 116. The 16th. They bought it right there. So they've got some different algorithm than I do. Kind of traded, just capitulating. It is capitulating. It's above the 9-day. So my expectation is you fill this gap to 169. You're trading at 168. This is more of a buy and hold. But they give you absolute reasons why you should pick it up. Yeah, I like that service. I really like that service a lot. Webull, we talked about Webull in the beginning. I think it's solid. I mean, trading platform, put $1,000 in there. It takes the place of my sports betting. And like I said, I went 0 for 2 this weekend. So I would have lost a lot of money on sports betting had I not done it. But I'm making money on the on Webull. Daily Stock Pick newsletter, you can sign up for that. Patreon. Remember, Daily Stock Pick newsletter, it has 3 levels of tiers. It's the free one. There's the paid version for $120 a year. Or there's the founding members for $400. This allows you to schedule. There is an additional charge to schedule, but it allows you to schedule a 1-hour meeting with me if you want one-on-one kind of just to talk about stuff. Like I said, if you're having girlfriend problems, I'm here for you. If you have to know where to sit in the lunch table, not to get beaten up during, in the cafeteria during lunch hour, yeah, I'm there for you. Visible service, $20 off your first month of service. I think it's $20 a month for the next 2 years, so you get your first month of service free. AT&T refer a friend. All of this stuff. If you want to gift me because you purchased SMCI when I said, yeah, Venmo, PayPal, anything, Cash App, whatever. Webull app, sign up for Venmo. If you don't have Venmo, you can sign up. Again, I'm just a boomer, so sign up for Venmo. Yeah, Reddit community, all the private stuff. I will talk to you guys tomorrow. I believe tomorrow. There will be one day this week I probably won't do a podcast. I'll still do a newsletter, but I probably won't do a podcast. But either way, I will talk to you later. Bye. Stopping recording. I don't know how long that went. Yeah, they changed the script, Christian. Morning, Brandon. SoFi was such a good buy, Chris. Come on down. I don't know why anybody would want to GOEV. I honestly, I just don't. I mean, Reddit has turned into what I thought it would be. The distance between Saturn and the sun and Baidu's stock price. That's a good one. How do I like this one? Oh, I think I logged in. Let me log out. I think I have another name on this one that I need to log in at. Other passwords. Let's see. No, that's the only one that I have saved. It's probably not good. Probably not good. Let me see if this is me. No, this isn't me, I don't think. User settings. Nope, that's not me. That's my other account. That's my fake account. So I'll have to get my regular account logged in some other place. But GOEV is just a mess of a stock. Mullen's a mess of a stock. I mean, somebody on Reddit telling me that Mullen is going to start, making money. No, it won't. PGR. Brandon, I'd rather see you in PGR than SelectQuote. SelectQuote, man, I think that's the Magnum PI dude that does SelectQuote. But PGR, Scott's right. PGR. I mean, look at PGR here. You know what? SelectQuote. SLQT. And let's do charting. Oh, let's do peers. Because who do they have as peers? Let's see. Select quote 45% over 1 year. Ethereum, eHealth, Hippo, GoHealth. I mean, look at these. Oof. Yeah. I mean, that's when you're trading in that type of stuff. I mean, one of the things, okay, so one of the paid newsletters that I'm going to do is how I day trade. I mean, let me see. I'll give it to you. How I day trade using confirmation, MACD, and RSI on shorter time frames and finding stocks to day trade. And part of that is finding volatility. And if you find volatility, you can trade on that volatility. Do not hold on that volatility. But this is what Warrior Trading, Ross Cameron teaches you, is that trading on volatility is not a bad thing. You can absolutely trade on pre-market active stocks. Look at these. These moved, 39%, 142%. Well, if you're comfortable enough, you can trade on both the long side and the short side. And you can trade momentum. And that's what he says. And so when I look at trading something in the short term, I mean, let's just look at Hub Cybersecurity. This is one that it came up because I think Brandon brought it up to me. It's up huge. Hub C. This one came up in the scan list. I think it was Brandon's. And you take a look at, let's get out of the strategy tester. You know what? I want to go into it because I can just click extended hours. Oh no, let me get out of it. We're just going to go into settings and set it up. Data, display extended hours, and we're going to go to a 5-minute chart. And this is, FYI. Any reaction in the market is an overreaction. And so here you can see how Hub Cybersecurity, popped 91%. Well, what do you think is going to happen when it pops 91%? Most likely, you've got this trend going down. You could have made 40% on the other side. Now, as it settled here and it loses confirmation on that 9-day EMA, I typically will sometimes even use a 5-day EMA on 5-minute charts. But you can see we're starting to get some selling pressure with huge volume spikes. But the MACD is way down. The RSI has quickly gone to oversold, and you're at $1.87. Now, if you're still holding from this point, from $1.60, you're still up 11%. So it's probably, this is how you trade and you find stuff. On this pre-market movers, this is how I used to trade. I mean, during the pandemic, I would come here, look at what's moving. And then in pre-market, I wouldn't trade in TrendSpider. I would trade in Active Trader Pro. Yeah. Yeah, Sundial is one, yeah. And Chris, what the fuck are you doing trading 10,000 shares of GOEV? Who is it? Ricky Gutierrez trades $500,000. I mean, he just flexes. Let's go to his YouTube because I can show you. I mean, he totally flexes. Now I'm getting all the Trading Triangle. These guys I learned a little bit about. Let's look at I mean, listen, kudos to him because he's got a bunch of people following him. And I am subscribed to his channel. I don't watch him though. He does have good beginner courses about, trading averages, But look at this. I mean, this is where he gets all of his views. How much money do I need to begin investing? That's from 6 years ago. I mean, this dude had no money. Now all he does is flex. Why I sell a course, learn, plan, profit. He sells a course to make money. So, but he will flex on life as a day trader 4 years ago. I guess he doesn't do a lot of YouTube anymore. Yeah, he does shorts. Yeah, Tesla giveaway. He gives away a used Tesla if you sign up for his courses. We're giving away a Tesla if you sign up for a course. Yeah, he's making a lot of money. And it's slick. I mean, he's got super, super slick production. I mean, he really does. And see, he runs all this off of a Mac Mini, which is what I was looking at maybe getting. But I probably will just run it off my thing. But he's got a good, I give him credit. I just would rather people not pay that amount of money for something like that. Oh, what's this? John Bon Jovi.
This just arrived from
He
Spotify.
looks old.
Streaming is the new it, right? This is unbelievable, and I'm really grateful for it. Look at this.
I don't know why this is glitching.
In recognition of 1 billion streams of Living on a Prayer. That's pretty cool. Thank you, Spotify. Thank you, you guys.
Hey, that's the color wall I have in my house that I was told to paint before I sell. But yeah, this is the way I kind of daydream. I mean, just disclaimer, that's. Ooh, yeah, Christian, I lost $100K trading oil on UCO on a reverse split. Scott, I think you were the one who told me about SMCI. PGR. Let's go to the strategy tester. And I don't, you probably are right on PGR. Let's look at the long term on this one. Let's see if it's a rebound. Oh, God. PGR. Sell. January 23rd. I mean, what keeps me out of PGR, the valuation is an F, growth A+, profitability A. Progressive, I mean, shit, insurance is getting great. It's a 13 out of 48 in the financials. That 52-week range. Oof. Let's see, 13 out of 48. I got to go, too, because I got a 2 o'clock meeting today. Travelers Insurance. I mean, look at this chart. Travelers Insurance is just shot back up. I'm not Roblox. And it's not that I am against Rumble. It's just there's no views on Rumble. I don't get a lot of views on Rumble. I shouldn't say I don't get a lot of views. I know creators that I've talked with who have said the effort of doing things over there doesn't pay off. And you get, my goal is not, and remember, my goal is not to grow significantly. It's to keep, like I was overwhelmed this morning with 26 freaking people asking me to look at stocks. I don't want, 9 million people watching me. I don't want Ricky Gutierrez, flexing and giving away a Tesla. That's work for me. That to me would be an absolute nightmare for me. But look at Apple turning over. Apple's down 0.85%. But look at Amazon. Amazon's holding up. Scott's been doing well, though. Scott's right on a lot of stuff. But Roblox Gamer, I don't listen. If Rumble had viewers and people that I thought I could help, I just don't think I'm a Rumble. My content would not flex on Rumble. So it might attract the wrong type of the people who go into GOEV. That was my reluctance to get into Reddit. And you look at the comments on the Reddit community. I've got to get a moderator over there too. But you look at the comments on this one. I should probably join. Yeah, I'll join it. Why the hell? But this one, a trend spider. Thoughts on Target when rate cuts start. Random lettuce. This one's funny. I strongly believe that Boeing will eventually have a strong rebound, but I thought this was funny. I agree with you. I think that's a good one. But yeah, 11 days ago, I just don't manage this one really well. Wait, that's from Motley Fool? Hold on, I have a Motley Fool. I have my dad's. Oh, it's fool.com. Let's see. Let's go over there. I always forget how to log into this damn. How the hell do I log into this damn thing? It's the worst website ever. It's the absolute worst website ever. Really is. No, I don't want premium content. It is, it's horrible. I can never figure out how to get in. I'll be right back. move this. Projects. Do Finder. Downloads. I did it all in one shot today. Share. AirDrop. Oh, come on. There we go. Move that over there. Waiting. Let me see. I hate this. I really hate this website. The website sucks. Let's see where SMCI is. Top stocks for 2024 and beyond. This was just published in the middle. Aggressive, Datadog, Airbnb. Went over the Airbnb. Let me see. Hold on. Okay, that was sent. We went over the Airbnb stuff. I don't believe in Airbnb. Travel demand is always lumpy, but Airbnb has managed to create an incredibly scalable. Let me just hold on one second. I've got to. I'm going to start. There we go. Good morning. Okay, we're going to auto this. Bring the colors down a little bit. There we are. And we'll put in the green screens. And we're going to put that in. Now we're going to say now we're going to move that. And it was an hour today. Wow. Next. 129 pod. Okay. Now I got my the video's rendering, so at least I can do some other stuff. DoorDash. Let's look at SMCI here. SMCI. Here it is today, an article from today. This AI beat NVIDIA. What is Supermicro? I mean, this is good that it gives you a nice background. Delivered results similar to NVIDIA last year. The company has a lot of common with the AI chip king. As Supermicro explains, AI workloads typically require... I mean, they produce very energy efficient rigs that run these AI models. Can Supermicro follow it? Here. Both stocks also at reasonable valuations. In fact, Supermicro is trading at a price-to-earnings ratio of 34, including its second quarter results. Hardware is cyclical, and the fact that Supermicro and NVIDIA have relatively low PE ratios for the growth rates shows that the market is skeptical that the current boom will last. Unlike software, hardware isn't recurring revenue, and semiconductor companies tend to see revenue fall in down cycles. However, AI boom is still appears to just be getting started, as hyperscalers like Oracle are building data centers as fast as they can. The hardware needed to run them is likely to be in high demand for foreseeable future. Still a lot of uncertainty of revolving AI, which means that Supermicro stock carries risk, but with the updated guidance, its similarities to NVIDIA and unprecedented demand for AI hardware, the upside potential clearly outweighs the downside risk. So that's your SMCI take from Motley Fool. But remember, these articles are just written by like guys who, like me, who just submit them. Let's see, recommendations. Here's the recommended screener. Let's do the latest. AMD, ServiceNow, Microsoft, EQT, Roblox, Dash, Coupang, CrowdStrike. It's funny, they recommend EQT. EQT has been one that's just traded in the middle, capitulated and just sat there forever. Come on, work already, TrendSpider. Okay, let's see. It got a hiccup. EQT. Why can't I put in TQT? Oh, I think TrendSpider is hiccuping. Let's reload it. Or my internet got whacked. Yeah, I mean those articles. I actually was going to apply to be a writer at Seeking Alpha. God, what is going on? Yeah, you're going to fill that gap. Okay, so it's not my internet. It is TrendSpider. Let's close this down. We'll close that down and we'll go to TrendSpider here. Do default workspace. I think I showed you, Chris, that SOFI has a gap to fill. EQT is the one that there we go. Okay, let's do the 4 hour. And run. Oh, come on. Oh, Mo, if you're here. Mo got in on SOFI. EQT, you're in at 35. I mean, 35.83, and you're trading at 35.80, 32. I don't think that's a bad price. Again, you're not buying this one for its growth. You're buying this one for its dividend. And I don't know that I'd necessarily buy it for the dividend right now, but when you get towards 31, 32, I think that's a buying opportunity on this one. Although I don't know if you're going to get there, because look at that MACD and the RSI, they're already pretty low. But SOFI, don't they have a gap? I think it's going for a gap. Yeah. You watch, Chris. It'll get to 953. Now, my trading advice is as you get towards that 953, I would start to trim. And the only reason I say trim is not because I don't think that this one doesn't have a long-term good outlook. It's that gap. So if let's just take this back to the last time. Again, this is August where it traded up in this realm. You don't have volume at a higher rate. Even if you pull this back, let's go to a weekly. We'll go to a weekly so we can tell where the long-term volume really is on this one. Because the all-time highs here, November 2021, there's nobody holding past 987. And 959 to 987, does it make sense to hold on for 10, 15 cents in the stock price? Probably not. So I don't know that I'd necessarily hold for that 10. And you can clearly see, take a look at this. That line right there at about 1050, I think that line right there presents the double top. I mean, you've seen it here in June 2023. You've seen it here. I need to text Charlie. Yeah, let me text Charlie. I'll remember to text Charlie. I'll text Charlie in a little bit. Charlie from MLS. But yeah, I would trade at that 953 level, and if you get up to this 10, take some profits. But that's if you're trading it. If you're looking to own it and own it long term, you're fine. I think it's $10 stock. I don't think it gets above 10. I think it's $10 stock, and when it gets there, SOFI. I think they're still losing a $429 million. So yeah. Ammer. I haven't sold PayPal. I haven't made moves on it. I am tempted to get rid of it. I said it last week. This is the range that I see it in. It's up 0.92%. I think you get to that 65 level, and I think you reject off it again. I don't think, they just had their product day, and their CEO said, we're going to shock the world. Did he shock the world? No. They moved 5% lower. Right now, the algorithm has you in at 63. It's 62.42, and you've just been capitulated. That $63 buy was great because you went all the way up here to 68. It's a great move, almost 10% in a day or two. Great buy from the algorithm. Even if you got in here at 61 and you moved up to 68, 68.21. That's a great move. I just think that you're in this range. And the upper part of this range, probably even, let's see. You could probably even move this range down to here to 63. And we're trading at 62.55. So I just don't have, you talk about confidence in management. Remember, I'm a big, here, let me upload this to start uploading this. I'm going to move to, hopefully that gives you enough ammo, because I'm going to get off here. I'm not good at doing a bunch of stuff at once. New episode. We're going to 129. There we go. Chris, I don't listen. I've told Charlie from MLS when he first started getting into this, he bought it like 7, and then it went down to 2, and he's like, I'm holding it. Then it popped to 10. I said, hey, sell this. And I asked him next event. I said, did you sell it? He said, no. So he's a long-term holder as well. But PayPal, Ammer, I'm not super confident in this one. If you go to a weekly, you've got tons of gaps up here. Now, do I think that this one, that 50-day is still moving negative? So am I gung-ho on it? No. I mean, I was gung-ho when we started to move in this direction down here for November of last year, when we started moving from 55 to 65, I was gung-ho. And you can see, pull it back here from this volume perspective, and we pull it back to its all-time highs right there around July 2021. You can see there's still a lot of people up here to 78. There's still a lot of people holding it at 78. Above that, I said it's an $80 stock. I think above that, it's just going to be a Herculean task to push that one up there. So, okay, I'm out of here. You guys take care. I will talk to you tomorrow. Say bye.